3.
Yeah, Kayla, it's fantastic to be here for Season 3. We've had such good response from Season 2 that I'm really excited about where we're going. So if you think about the genesis of where we've been on the podcast, there were the two of us with our dulcet tones, and then we brought the Founder Series in, where we brought founders from a number of different areas across the IT service provider landscape. And then this season, we're really focused on bringing those experts to the table.
Yeah, I'm really excited about this season. I think it's going to be definitely one that people are going to want to listen to. Our technology community is really going to want to listen to this one with the experts that we've got. I'm extremely excited about the lineup as well. Like, we've got some really good people coming on, so I think it's going to be great.
Yeah, and look, really we've got an entire plethora of people. That's everything from finance brokers to help with sort of answering some of those finance questions that business owners often struggle with. We've got some people around, culture and how to build high-performing teams. And it's a great segue to who we've got actually on this episode, because we're going to deep dive into insurance.
Yeah, and so without further ado, we are welcoming Tim Stephenson from SherpaTech today. So Tim works closely with MSPs and businesses to navigate cyber insurance, risk, the realities of insurers and what to actually expect from them. And he's seen firsthand what actually gets covered and what doesn't get covered, and how cyber incidences and other incidences in their businesses can really affect their premiums, what insurance might actually mean, what insurance they need in their business as a result of that. So I'm really excited about this conversation. So Tim, welcome to Two Sides of the Table.
Well, thank you so much for having me. I'm very humbled to be included in the expert group, but it's been great to hear you guys on the first 2 seasons, and excited to participate in the third.
Awesome. Thank you so much. I do remember when we launched the first couple of episodes of season 1, you and I jumped on a call and you said to me, we're really interested in being on the podcast, and look, here we are.
Shameless self-promoter.
First episode of season 3. There you go. I stay true to my promises. All right, so take us through business insurance as a whole. Like, what do businesses need to consider, particularly in the technology space?
Yeah, so in the technology space, we see a lot of businesses trying to cover their biggest exposure, which is their customers. Mm-hmm. So first of all, when you start dealing with clients and selling services, as an IT business, you're actually very similar to doctors, lawyers, and anybody else who gives professional advice.
Wow. Yeah.
And so the protection for professional advice is professional indemnity. And so in a sort of a simple sort of soundbite, it's protection for bad advice or perceived bad advice to your customers. And it's funny, I've heard some technology people say, we're not giving advice, we're just selling product. But through selling product, you're naturally giving advice in many cases. And so it's really important that you have protection for that. And the professional indemnity protection that comes from insurance, it's majority legal protection. So it's in the event that we have the customer suffers financial loss and blames the provider, the insurer will deliver the legal services to counter that claim or manage that claim and then follow it down a myriad of different paths that it can go down.
Yeah.
We see that as probably their biggest exposure.
Yeah.
And as technology over the years has changed and morphed, it's then grown its own class of insurance. So cyber insurance used to be actually part of professional indemnity.
Yeah.
And it wasn't until the claims started getting more complex and exposures were not what you would typically see in that bad advice category. Cyber insurance, about 15 years ago, was born as a new class of insurance to cover cyber risks, and that has evolved now into not just legal protection, but incident response services. And so for an IT provider, they'll have those two insurances together. But for many of the IT providers' customers, they need to hold cyber insurance as well, because in the event of an incident that can come from anywhere, as we all know, they need a team of experts across communications, legal, regulatory. Negotiation is even one that we've seen specialist providers on the insurers' panels. I was on a call with one last year, and they could reference the ransomware group straight away. They knew that they paid out. They knew their avatar of what they looked like. And there's all these little niche specialty skills that come from the insurers. And the reason they do that is actually to save themselves money. Because if they respond efficiently, the quantum of claims is less.
Wow, my head's
I know,
already
wow.
spinning, and the episode's only just started. And look, I think insurance is one of those really unknown areas for many business owners. And I think if I think back to my own business when I started, sort of the analogy I use was probably like my first car, the Ford Telstar that I bought. Like I didn't pay for full insurance; I just got third-party theft
Oh,
and
yeah.
fire because I was trying to scrounge around and save a few dollars. And I think if I cast my mind back, I actually saw insurance as a ticket to play. And when I first started my first business, I didn't have insurance until I had to get it in order to be able to respond to a piece of work. So for me, that was the catalyst. I wasn't thinking about risk at that point in time. It was more, I just need this in the top drawer to allow me to do more work. Is that a common thing that you see with many IT service providers?
Yeah, it is. It's probably a maturity step where we see businesses, usually the first reason they buy insurance is their client tells them they need insurance to operate. But usually through going through that process, they unpack why they actually need it. And there's two schools of thought. One is you buy your insurance as a ticket to play, and the other one is you have a robust program that if you need to pick up the phone and make a claim, it's there to protect you. And interestingly, the ticket to play doesn't always work out to be cheaper. And we sort of see that if you're going to pay any money, you might as well make sure it's there. We do see some programs that have heavy exclusions, and that's for a business then to make that decision to sometimes self-insure and have a cheaper insurance and agree that they're not covered for a certain portion of the program. Our role as a broker is really to navigate the insurance market and deliver on the client's requirements. We have some customers where they need very sharp insurance premiums and very narrow policies, or sometimes they need broad coverage for a very wide range of services. And you can also do a lot of tricky things sometimes, like increase excesses or change coverage limits to change cost and coverage. So it's a real fit for purpose product.
You said something really interesting there, self-insurance. Is that just having a pot of gold somewhere that will cover you should an incident happen, or what does that mean?
Yeah, I mean, so I had my own business a couple of years ago, and we had a fleet of about 30 cars, and we chose to self-insure it. So like Pete said, we just took out the third-party coverage.
Okay.
We didn't cover the assets
Yeah.
because, the assets were, quite cheap cars that were used by tradies, and in the event that we wrote off a car, well, it wasn't going to kill the business.
Yeah.
And so I took a very, we insure for the worst things. And if we can wear it on our balance sheet or self-insure, you're just agreeing that in the event that something happens, you'll cover it with your own cash. We see that as well with a lot of cyber insurance programs where people will set quite high cyber limits. They still need the team of experts to come running from the insurer, but they might take the first $100,000. Of that exposure themselves, and they can reduce their program, and then they're trying to cover for that, larger event that potentially could kill the business.
Yeah.
So it just depends on the risk approach you want to take, and that's one of the things. It's like our first step of really understanding a business is how do you want to manage risk? Do you want to accept it all, some of it, or and where does that transfer happen as well?
Yeah. So give us the sales pitch then. What does SherpaTech do? How was SherpaTech born?
Well, I mean, it's very fortunate we're named Sherpas because we're the assistants, we're the guide.
Yeah.
We really try to help our clients navigate the insurance market and also navigate how they approach risk. That risk discussion is something that doesn't come naturally to people to talk about, but we all navigate risk in our everyday lives. If I go to cross the road, I think and I stop and I check both ways and little things like that in business you can use those same tricks when you approach different decision points.
Yeah.
And if you manage that risk well and you encourage your teams to think about risk as well, there's a lot of great industries, medical, aviation, where they have huge exposures and they manage risk really, really well and they reduce the likelihood of, incidents.
Yeah.
And so if you take the same approach to technology and try to reduce that risk environment, you can actually get a really well-priced insurance program because you can show how mature you are. And we actually see that with, say, businesses that sit in that 5 to 20 mil turnover range. They're sometimes higher risk for insurers than the 50 million plus range because of the controls and frameworks that we can usually articulate to the insurer they have in place. And sometimes those, senior management roles that sit across those different verticals, they're not always there in a small business. But that's where I think the insurance programs are very important, because a $1 million claim will kill a $5 million, $10 million turnover business.
Yeah.
But those larger companies can probably wear some of that or navigate that as well.
Yeah, it's really interesting that you say that, because one thing I do say to my team is before we go in to make a decision or we deal with an issue or something like that, I always say to them, look both ways before you cross the road. And it's really funny that you use that analogy. So.
And I think it's really important these days as well to bring the clients of technology providers into those conversations, because, I've heard it a lot from managed service providers. I mean, we also look after system integrators and vendors and disties and others as well. But, the managed service providers always say, I gave them the quote for the MDR solution and they've declined it. And then what happens if they get breached? Or what happens if they don't take my advice? And then there's a consequence from that. And so, we've always sort of advised people it's about the evidence as well. So an insurer doesn't say you must have this checklist of things when you come to make a claim, but you can always represent yourself better to insurer should you have all those things. So if you've gone and told your clients that they need to do these things to improve risk, evidence is a wonderful thing, and repeating that message. We see really good MSPs with their QBRs having a risk register that they raise with their clients. And a lot of these things, they're insurance related, they improve insurance, but they're not necessarily the insurance policy you get from the underwriter. So you can improve your risk without spending more money on insurance.
Yeah.
Yeah, and I think a lot of that comes back to, I always think about the classic statement, what reasonable steps did you take? So,
that's it.
if ever the worst was to happen and you're sitting in front of a juror and, it's what reasonable steps did you take at that point in time to prevent the train crash from happening?
Yeah, and you can foresee that coming. We had a claim last year where a client of ours was concerned that their client was going to make a claim against them because their client had paid away a significant sum of money to a third party where they were a victim of a phishing attack. And straight away, the insurance policy does not cover the third party's money that they've paid away for our MSP. But I said nothing stops them from bringing a professional indemnity claim against you down the line if they want to try and blame the fact that your controls might have been lax or MFA could have been turned off, or, I don't know the twists and turns that could take. But I said, you've got a really good security vendor there. Talk to them, get evidence of the logs, build as much as you can to put in the back drawer to say, okay, if that comes something in 3 months' time, we've now got everything ready to go. And fortunately, it didn't end up going down that path. They did a really good job of helping their client navigate that. But you sort of put two hats on to go, well, how do I protect myself, and also how do I help the client is really important.
And so you have those conversations with MSPs or technology service providers around if they think a claim's coming their way, you help them through that.
Yeah, definitely. It's something that a lot of people kind of don't know what a broker does. And in our industry of insurance brokers, there's varying degrees of service that come from different brokers. A lot of the business we win from other insurance brokers, the complaint usually is, well, I don't think, one, they understand my business or understand technology. And so we've invested in our team really having deep knowledge of technology and insurance. And the other one is sometimes it's a little bit lazy in insurance where renewal terms come late. There can be complex twists and turns, but we try to make sure renewals start 8 weeks out. And, it doesn't become a surprise. And the other, I think, advantage of having a narrow customer set and specialising is that, if we see in June a particular trend with an underwriter, by August, we're telling our other clients that, hey, look, we've seen this, so we need to be prepared for that, do a bit more work. And the more information you can give, whether it's me or another insurance broker, the more information you give them early, the better equipped they are to work in your advocacy with the underwriters. We're sometimes salesmen where we have to sell a business to the underwriters to say, hey, look why this looks really good. They've got ISO, they've got great controls. Their vendors are actually taking some of the risk. There's a couple of vendors out there in the security space where they actually have security guarantees to a certain level before, a client could possibly claim. we'll proactively share that with an underwriter to say, hey, look, if this business goes through that type of claim, well, they have these other risk mitigators in place, and that can lead to better terms, better coverage, and also a better understanding of those businesses.
Yeah, and look, I have to admit that when I first was dealing with insurance, I was exactly in that same boat. There was a insurer that was recommended by the industry association, and I call them up, and they send me a form to fill in, and I fill that out, and they send me back a policy, and then I don't hear from them again until next 12 months, where they send me the same form out. I fill that in, and the only thing that changed was the price continuing going up.
Yep.
And I think one of the things that was always in the back of my head, and is probably in the back of many of our listeners' heads as well, is, will the insurer pay out? Because I think if you look at people's experiences in their own personal lives, especially in Queensland, there's been many people that have been affected by floods and stormwater and other things, only to find that money that they've been paying to the insurer, didn't cover it because the water came out of a manhole, or the water didn't come from the sky, it came from somewhere else. And there's probably a little bit of let's call it buyer beware that people have around insurers. And it sounds like you provide that understanding for people to know, well, is this fit for purpose? And if there is an issue, how do you navigate that to make sure your claim is covered?
Yeah, I mean, it's a really good point. I mean, when I was outside the industry, I never really understood insurance. And, it was one of the things that when I first started working with Andy, my business partner, he helped me understand how you can leverage it and use it to your advantage. And I think there's many examples, especially in retail insurance, where people's expectations aren't met. The big thing we try to do is eliminate off-ramps for insurers. And so a lot of that's done through disclosure. Our really good customers engage early with us and frequently. And the more information that you can tell an insurer, almost the more you can hold them to account across that information. And the where did rain come from and those sorts of things, they're common, sort of reasons to disbelieve insurers, because everyone knows somebody who had a claim denied for some reason. But many people who have had claims paid, they're paid because an insurance broker advocates for them as well. So that's one big thing we do for our clients is at claim time we advocate for them. And there's also a lot of nuances and grey to insurance. And so if somebody can help guide you through that, and say, well, did it fail during a storm, or is it lightning? What's the evidence? And actually, crafting that. In our experience, insurers pay frequently and often. It's their business model. They want to pay out, and they have certain obligations to under Australian law. So we use those things to hold them to account. The other thing with the cyber insurance model, which I think is a little bit different sometimes to I had a car accident or I had a property, is they're delivering a service of specialists who come running when you have a claim. And the terms that insurance for cyber is written on now is very broad, and it's intentionally so. So we're seeing a lot of AI exposures come out now, and people are saying, well, hang on, am I covered for this, yes or no? We've had that tested recently with some, so one of the insurers, Emergence, have some really good examples of some AI claims, and they're covered by their wording that was written a couple of years ago because it was designed intentionally to be broad so they can cover those claims. We've even seen insurers as well through a claim. Sometimes they don't cover hardware because you've got to indicate on a policy that you wanted, physical servers covered for encryption during a ransomware event. And some insurers have made decisions to pay for hardware, basically to minimise the quantum of the business interruption claim. So if you're covered for the business interruption, you can have a really large claim because every day that business isn't trading, the insurer's on the hook. But if the insurer can then make some strategic decisions to reduce the quantum of the claim, they will always do that. And, if we can help them proactively do that, you get a quicker claim, happier customer, and the insurer moves forward.
Yeah, right. So it's you're also being covered for the loss to your business as well as the potential damage or ransom that
you can
access hijacker is.
Yeah, wow.
So cyber's a really interesting one because it's such a new class of insurance. Without going too geeky and nerdy on insurance, but
maybe it's a good point maybe for us to sort of take a little bit of a step back, because I always look at, I've got my certificate of currency and there's all sorts of different things. There's 20 mil this, there's 5 mil that, etc. Maybe take us through, what's the difference between, public liability, professional indemnity, and cyber, because I
Yep.
think, when I look at my certificate of currency, it's just one insurance. I just pay the one bill, but
Yep.
there seems to be very different line items there.
Yeah, definitely. So the professional indemnity is protection for bad advice or perceived bad advice from your customers. So that really is customer focused.
Yep.
And then the public and products liability is really a personal injury coverage. So in the event that your products or services cause harm, and so if we see a business that's doing electrical cabling or physical on-site work, their public and products is actually quite expensive. But if they're an IT business doing, professional services, public and products is really cheap. And so that's one of the big things. You've got to make sure that you get the industry and the classification right across those classes. And then cyber insurance is really protection for your own cyber environment.
Oh, wow. So it's not for your customer's environment, it's for your own
No.
environment.
Yes, yeah, that's a common misconception. And that's one that we really highlight to MSPs because their customers naturally think that, well, my
They're
IT
covered.
provider has
Yeah.
insurance. So,
Yeah, wow.
so breaking that one out is always really important.
And I think that's really confusing because if you look at responses that you have to an RFQ or to other proposals, often the customer's asking for $5 million of cyber insurance. But
Yep.
the reality is from what I'm hearing, that $5 million has no connection to the customer at all.
There is overlap. So you do have some sections of a cyber policy that overlap with professional indemnity, but the majority of it, the main chunk, is for your environment. Now, we're seeing New South Wales government in particular are asking for 10 and in some cases $20 million cyber insurance for contractors doing work for the government. We've worked with a number of clients helping them explain to the panels or procurers of those services why the professional indemnity limit being higher and a level of cyber a bit lower is actually acceptable. But there was a recent paper written by the Australian government solicitors that if anyone wants to reach out, I'm happy to send them around. But basically, it articulates why the government is asking for these higher limits and what they're actually meant to cover. So if you're responding to any of those panels, if you know what the other side's asking and why, you can craft your program to meet those needs or also explain away the other things you do to mitigate risk in those areas.
So what happens if, say, for example, like a business is dealing with sensitive information on their customers?
Yeah, like a hybrid environment. Yep.
And that gets breached. So say I'm dealing with sensitive information on my customers, I get breached.
Yep.
And then the customers put it, I don't know, a disadvantage because their information's out there and it shouldn't be.
Yep.
What kind of claim does that look
So
like?
that would be a professional indemnity claim from your customer against you.
Yeah.
And then you would have a cyber claim that would jump in to mitigate that loss, deal with the regulatory compliance, and potentially also negotiate then with the customer.
Yeah.
So we've seen, and that comes down to supply chain attack as well.
Wow.
As in a small example, you're that supply chain to them.
Yeah.
But that can also be easily affected by third parties as well. A lot of IT vendors are passing through services. And if a claim ever occurs, it follows the line of contract. So even with big vendors, insert largest vendor here, it would go through the MSP to that vendor, not around them. So they get drawn into it.
Wow. So you've almost got like this support network for when someone goes wrong with the cyber insurance. So they're almost like the tow truck driver that comes out and then helps you respond to the accident when it's happened.
We had a really good example with another customer of ours whose client got breached, servers encrypted, and they called us and we said, okay, let's look at your policy. We believe this may not be your insurance. We believe this might be your client's insurance. But we triggered the insurance policy straight away, called the insurers proactively, and then got the insurer to basically give our client the advice that, no, this is not your insurance. So they were able to push back on their client to say, hey, we've notified our insurer. They've advised that this is your server. We were working on it, so you need to trigger your insurance, not ours. They could still bring a professional indemnity claim against them down the track, but, and that's then to the point of a lot of our clients, the more mature ones, will say, we need all of our customers to hold cyber insurance before we even engage with them. Because they can easily, be victim of a phishing attack, leave a gate open, something happens on their side. It's not the MSP's fault.
No.
Yeah, and it sounds like one of the things is being proactive and
Mm.
having a really robust incident response plan to know that, when that it happens, because the reality is it's happening all the time. Is know who to call first,
Yeah.
and it sounds like almost the first call should be to your broker and insurance provider.
Yeah, definitely. And the insurance providers will jump in. They also have a lot of the cyber insurers now have almost like a no claims bonus with their policies where you can trigger it and call them and then it help you decide whether it's a claim or not in the first 24, 48
Yeah.
hours. So, and the reason they do that is because they know if they jump in early, then the quantum of claim is less. Whereas if people say, oh, I don't want to trigger my insurance, oh, I might have an excess increase or something, they stay away and then the insurer finds out about it a week later, they've got a much bigger claim on their hands.
Yeah.
Yeah.
And look, one of the things I keep hearing in the industry is how difficult it is to get larger amounts of cyber insurance. So, organisations that might have 5, they struggle to be able to get 10, or
Yep.
very difficult to get 20. And I remember even back at MOQ, we had 10 million for cyber, but that had to be underwritten by multiple insurers in order to be able to then, because they each would take 5 mil of the pie in order to be able to then make up the 10 mil. Are you seeing it harder and harder for MSPs to be able to get higher levels of cyber insurance?
Yeah, no, we're actually seeing it easier to get higher levels of cyber insurance now, and it's partly driven by the market. So there's increased providers now of cyber insurance, so there's more optionality for us as a broker. And they're able to do higher limits as well. So, when you're with MOQ, it could have been like it was a 2 and a 2 and a 2 to get all the way to a 10. Now we'll find some providers will do a straight 10. But we're also a bit strategic about, if you were to do 2 5s, the second 5 is typically cheaper as a whole than just the 110. So, sometimes an insurance broker might do that to minimise the cost as well, because the second insurer's got a lower chance of the risk on the second 5.
So MSPs or anyone really that gives professional advice should really be talking to their customers about cyber insurance or
Yeah, so cyber insurance is a regulated market. So you need an insurance broker to basically break out limits and coverage sections. But everyone can tell their clients that they should go and have a conversation with their insurance provider about cyber insurance. So nothing's to stop them from doing that. And it's actually, we think, a good proactive step, because in the event that they do get breached and try to blame the IT provider, you've told them that, well, we might be operating your M365 and a few other line of business apps. But if any of your other services go down, we may not be the one that manages those. Websites commonly are actually, not managed by the managed service provider. In some e-commerce businesses as well, that's where the business interruption can be very, very large. If an e-commerce site goes down, they will blame those providers. I've also heard some end customers say, oh, but that's okay. We point to XYZ provider, that runs our website. They would have coverage for that. And then we break that out with them and say, but the provider, like a Xero for an accounting system, they provide the box. You're responsible for everything that goes in the box. And if you leave the box unlocked because of the configuration settings, you will wear that responsibility.
Yeah, it's that classic shared responsibility. So it's like a cloud backup, is that it's a shared responsibility for that against the vendor and the actual service provider there. And it sounds to me that insurance is maybe a great opportunity to have a more strategic conversation with customers as well, and really start to talk about what those risks are and where those lines of demarcation is, because I think there's often confusion from customers and MSPs about who's responsible for what. And it sounds like cyber insurance might be a good leading place to go to then really start to carve out and help customers understand what's covered, what's not, and tie that back to the MSA.
Yeah, definitely. And they can bring you could ask the client to bring their insurance broker into that program as well and be very proactive about what's being submitted. One of the things that I think people get sometimes a little bit confused about is how easy it is to get cyber insurance. Because of the increased competition in the market now, there's some insurers who might only ask 3 or 4 questions. Do you have MFA? Have you had a claim? And some compliance. And you could use that as a de-risking strategy to onboard a risky customer, because you may not have done the full due diligence on their environment. But if you've at least had them hold cyber insurance as you onboard them, you've helped de-risk that a little bit.
Yeah. Yeah, wow. I'm learning a lot as you're talking. Like this is mind blowing stuff. The thing for me that's like sticking in my brain is how you really help like
Mm.
MSPs and technology service providers to through the process. Like you're constantly in communication with them throughout the year of that
Yeah,
policy.
it's something we've changed, I think, in our client management and our onboarding of clients as well. A lot of our clients used to see insurance as a headache. We
Mm.
really try to make it a value added sort of trigger within the business that if your customers are bringing you insurance requirements, bring them to us. We'll help unpack them. Make sure the insurer covers them and take that back to your client. And if your team members see proactive ways to manage risk, that spills into other aspects of the business. And then a wider team will ask more questions around, well, hang on, what about this area over here? Or what happens in this event? And so it can unpack a lot of, value added benefits in a business. We also see, you can't borrow money to buy property if you don't take property insurance because the lender would be concerned it's going to fall over.
Yeah.
We've seen some proactive businesses de-risk their business through insurance to be able to borrow money against their IT assets.
Yeah.
So, the same sort of thing can be said for using insurance as a value-added lever instead of just a cost centre.
Yeah, definitely makes you think how you can actually start to be more strategic
Yeah.
with that. But although I think you can be strategic, I think one of the big challenges for many IT businesses is just that's such a large number that comes off the bottom line for insurance. My understanding though is you can finance insurance now, can't you?
Yeah, so there's a lot of premium funders we use to do monthly payments. So, you can carve it into 10 or 12 monthly payments. And we see a lot of businesses doing that to improve cash flow, which, ultimately allows you to deploy it into other areas like people and marketing.
I like that.
Yeah, fantastic. Because look, for me, it always seems to be that the insurance renewal always comes at Christmas time,
Yeah.
basically, and all those bills coming in at once.
Where do you see claims typically fall over? You sort of touched on this before about, I guess, being really honest with your insurer and declaring things. But where do you see things potentially falling over for people when they try and do a claim?
So typically it's around not what happened at the claim, but what happened when they first sought to get insurance.
Yeah.
And so that original declaration, I've seen, look, insurance is a little bit backwards in the way it does things.
Yeah.
It's still very paper driven, where people are sending around PDF forms to fill out, and they can be a little bit cumbersome. We're working to improve some of those things, but that's driven by the insurance market. And so when you're asked to submit information on your business, the more you submit 6 months earlier before you have a claim is the pillars that we lean on when you have a claim. So it's important to actually articulate your business activities. We have seen some providers where they have very narrow policies not cover certain activities that an MSP does because they might have only started doing it 3 months ago and they got their insurance 6 months ago.
So keeping up to date is really important.
Yeah, and also if you're going to start consulting in an area that 3 months ago you weren't, or you're now going to deliver a new level of security to your clients, we've seen some MSPs start to offer incident response, which is fine, like an insurer does. But then you've got to tell your insurer that now you're doing that, because if you have a professional indemnity claim from that incident response, and the insurer still has you classified as an IT consultant, when you come to make that claim and say, hey, now the client's blaming us because we dropped the ball on an incident response, they'll go, but you never told us. So they're the areas that need unpacking. Like SCADA, water management, there's a lot of other areas that insurers don't like. And so if we need coverage in those areas, we have to be very specific about what we're seeking. Otherwise, they can be general exclusions.
Yeah, and it really, I think, comes back to that continual disclosure, which is an interesting point because, often MSPs work with their customers, their end customers get a disclosure statement, and the customer throws it across to the MSP to respond to that. Is that a no-no for MSPs that they shouldn't be filling out the forms for customers?
Yeah, we've been banging this drum for a while now that MSPs really shouldn't be filling out the insurance forms for clients. I mean, a very basic example is there's typically a tick box against you have MFA. They're very binary about how they ask that question, but if the MSP ticks that and then a breach on the client side happens through their Xero or their CRM or an area that the MSP doesn't manage, the client could realistically point back to the MSP and say, but you said we did. We assumed that you were actually controlling those settings. And then they can draw the MSP into that claim. So by all means, consult, help your clients fill out those forms. But I would typically do that with a call or a qualification around, here are the platforms we manage that we meet these requirements for, not just a blanket, of course we cover that for your whole business. A lot of them, like ISO certifications and other areas, actually sit with that end client. They don't sit with the MSP to validate and verify. And I have seen some MSPs complete the entirety of those forms. And you are helping your client, but you're opening up risk there because then you could be blamed for something in that example.
Yeah, it's really interesting that you keep talking about the word risk. And I think one of the guests that we're going to have on a future podcast is a financial advisor. And I always remember the first time I went to a financial advisor, one of the first questions they ask is about risk. And everyone's got a different risk appetite in regards to, are you a high risk investor or are you a low risk investor? And insurance is the same, because it's almost like, what are you prepared to actually, run the gauntlet with versus what do you want to make sure that is locked up and secured?
Definitely. And, you can manage that risk in different ways as well. So it doesn't just have to be a cost to insurance. We do see some businesses that are uninsurable. SCADA's a big one, where water management, those sort of areas. And so they'll lean on contractual ways to manage that risk instead of just insurance.
Yeah.
Yeah, wow. I didn't realise there was uninsurable things.
Oh, a lot of uninsurable things. Far North Queensland.
Yeah, wow. And look, this just sounds like there's so much information for people to get their heads across. And if people are wanting to sort of deep dive on this, like, what's the best way for them to sort of start to educate themselves and really be informed about, what are they currently covered for versus where those gaps are, and help them maybe even understand their own risk appetite?
Yeah, I mean, we're using a lot of AI tools now as well. Contrary to popular belief, I don't like reading long 40-page insurance documents, but summarising those and actually using some AI tools to look at your current policies and ring fence it and ask a simple question, about what could I or could not be covered for, is a great way to look at your own individual risk. Engaging an insurance broker who's a qualified professional in that area to go deeper on that as well. But your first point of call really should be your existing insurance broker, because they also understand and manage, and I keep talking about risk, but they're the activities of your business. And having somebody across all of those, sometimes I think the gaps can appear in programs when one party places insurance through this broker and then the other one, and in the same business. And then someone goes online and buys it here, and then somebody does something over here, and then they all get mashed together. And it's not until you have a claim you find out that, we didn't have contractual dispute management covered or something there.
And so, if I was to go back to the office this afternoon and pull out of the policy out of the bottom drawer and dust it off, are there any red flags, do you think, that I should be looking for?
Definitely. I mean, not on your policy. Your policy's robust.
Wonder who did that.
But you've always got to look at the exclusions, and that's always what the insurer won't cover. There's endorsements as well, and so endorsements can be positive or negative things. Sometimes they can say we allow you to trigger the claim via an app, is a common one, because they wrote a wording 4 years ago and they're reusing that same legal wording. But yeah, the exclusions and endorsements are the big red flags for me to look at. And then sort of unpacking, well, what do they mean by those, or how far do they go into the business? So you can't do it in isolation. You really want to understand what are the business's big risks, and do these exclusions, endorsements, or gaps in the policy lead to exposure to any of those?
Yeah, wow. And look, I think this podcast has really typified why we're doing season 3, is because there's so many nuanced areas about being a business owner and running a business that you really need experts that know that, and that safe pair of hands to know, there's someone that I can call on, there's someone that's got this for me, and I don't need to be a legal expert looking at 4-point font trying to work out what's excluded and what's excluded in PDS statements.
Yeah.
Tim, thank you so much for joining us today. If people want to get in touch with you or, I guess use your services, how do they do that?
Yeah, so we're on LinkedIn a lot.
Okay.
We're a lot of industry events and our website, so sherpatech.com.au. And, reach out to myself, Andy, Hannah, Yaz, and the wider team as well. We're all here to help.
Amazing. Thank you so much. That was great. And Pete, thank you so much for once again joining me on the other side of the table.
Yeah, look, it's great to be back for